Hey there, guys, and happy Monday. We have a huge week coming for us, an absolutely massive one, where we got to pay attention to what exactly we're going to get from those catalysts and what it could mean for the market. Are we going to get that September sell down that comes along with it? Is it going to be an ouchy October to follow? We're going to have to watch those reports to watch and see, because after those reports, then we have inflation that comes up after that, and then the Fed meeting not too long after that one as well, plus Michigan consumer sentiment in there. This video mostly focuses on that first week, and we'll also take a look at the technicals to see where those major opportunities come in our way. And now, mind you, as those opportunities do come our way, my favorite way to take advantage of them is through options, and I'm running a workshop this Saturday. If you haven't used options, want to know what they're all about, there's this Live with Dr. Stock. So this workshop, you tune on in, and the link is down in the description. Code word MONEY, M-O-N-E-Y, is going to save you 20%, and it is a bargain price right now. Limited number of seats. About 90 minutes of time with the Q&A, might go as long as 2 hours. You can ask all your nuanced questions. It's made to take the absolute beginner and get them ready for that trading. You can scroll on through these to read more about what exactly is coming your way. There also is a forum community that goes along with that. You get 60-day access to that forum community. That after the workshop is over, you still get access to the recording from that workshop. You can go back and listen whenever you want. And you can also talk with the other members there, and also previous members from other workshops that we've done. I do have a more advanced workshop in the pipeline that's coming up next after this beginner one. This is the last beginner one. There are limited number of seats. Code word money when you sign up. Guys, let's get over into the calendar of events here for this week. So 10 o'clock ISM manufacturing, that's tomorrow. 10 a.m. Eastern time. JOLTS the next day on Wednesday after that. Still 10 a.m. ISM services, 10 a.m. So expect any amount of volatility at that 10 o'clock hour during those times. I'll break each of these things down for you. Non-farm payrolls and unemployment rate also coming our way on Friday. So especially with the Fed coming out and talking about rate cuts like they have and coming off as dovish as they have, this is huge for us to watch for these. The market, I said that we would probably de-risk on Friday. That's exactly what we got on Friday. And now it's that nail biter. Okay, what exactly you're watching for in the meantime? I'll show you on the charts what I'm watching for. You guys can get that as well. Now for ISM manufacturing that we get tomorrow at 10, we've been putting out some contractionary numbers. Anything below 50 is contracting. Anything above 50 is going to be that expanding part for it. So we've been riding just south of 50, and you can see the trend up that we've had over the last 10 years here. This last 3-year period or so that we've seen that slow, steady upward climb. We want to watch for breaking out of that, especially if we drop down below 46, and maybe even if we drop down below that 46.9. So maybe south of 47, but taking out the October low of last year, July low of last year, that 46.9, 47. Certainly if we drop down below 46, the market's going to very much dislike that. And we want to watch for that break in trend. If it breaks to the upside, that's upward pressure for the market. So anything taking us above 48, the market's probably going to be all right with, especially if it comes in north of 50. Moving over to what we got for JOLTS, the big thing for JOLTS is breaking this down here at 7.1 thousand jobs added for this one. So actually, I think it's actually 7.1 thousand. So I believe that's millions that we're looking at right there. So for this one, watching that push down below 7.1 is where the trouble comes in. If we start to see that we're starting to fall off from there, especially because that takes us to pre-pandemic levels when we start to put in those below 7 million in jobs in the job openings and labor. My goodness, I can't talk today. Labor turnover survey that we get from the JOLTS that happens on Wednesday at 10 a.m. And then the train just keeps on rolling as we get into ISM services. And you guys can see that we've been on a decline from expansion down towards about neutral on this thing. And if we change the calendar over to the last 10 years to watch and see what happens, it's been really tough to push this thing down much below 49.2. So if we were to come in below 49.2, that could also be something that, especially because we're starting it later in the week, if we build a narrative that things are bad, then the market will be bad. If we get confusing information, the market will probably just show us some volatility. If we get good information, the market's probably going to recover quite well for us. Now, mind you, it's probably still going to hold its breath for non-farm payrolls. So what we're looking at right now is the last 3 years, because if we go to the last 10, it includes the pandemic, and it really makes it hard to see anything that's going on. So let's drop down to the last 3. And what you can see is that we've actually been on a steady decline, which has been contributed to some normalization, but the revisions that we got last month were not good for us, taking us down to about 10%. I think 147,000 was the number for June. Revised down to 14,000. I think it was 187 for May, down to 19. And then July coming in south of that, I think it was 110,000 expected, and we got 73,000. So now the question is, are we going to see negative numbers come up in those revisions? If we do, it can signal that the Fed was behind, and that could be something that caused the market to feel a little bit more pain. Now, what the market really wants in all of this, I'll get to the unemployment rate in just a moment. The market wants to feel that we're going in softly towards that soft landing, if you will. If we have to do emergency rate cuts, it's probably downward pressure for the market initially till we reach critical technical levels. Once again, I'll show you that on the charts. However, that soft landing scenario, that if the numbers come off not so bad and the Fed's like, we're going to do this rate cut, we'll reevaluate for the next one. We are thinking that that could be something that we continue to do because we're starting to see those levels that we would like to see. So hopefully we continue to get a dovish Fed. That would be bullish for the markets, and we could certainly take off from where we're at now. So not everything's doom and gloom. This is more a preparation of what could happen if we do happen to see red in the markets. If we continue to see green, well, then party on Wayne, party on Garth. So for non-farm payrolls, just to be clear, we don't want to see this downward trend continue because we're starting to get down near that zero territory where things could flip to negative. That could be enough to spook the markets. We would like to see a nice strong number come in. Some upward revisions would be nice if we are going to in fact see that. I don't know that it's all that expected that we will see that. So that's why I'm talking in a tone of preparation for this video. And I'll talk to you about, is the time now to be bearishness? And then I'll also talk about trying to front run the markets. And you might like my perspective that I have on that. So moving over to unemployment rate, look at this shelf that we've made going all the way back to July of 2024, all the way over to July of 2025. We have not been able to break above 4.2, but look at this low that we got in January and then the low that we got in June. This is almost like an ascending triangle pattern on a candlestick chart that looks like we're starting to get some upward pressure on that unemployment rate. If we come in at 4.2, the market, and once again, this is narrative based. So what we see across all the other reports that come out, this is one of the last ones for the week to come out. That comes out at 8:30 on Friday along with non-farm payrolls. If we see 4.3, the market's probably going to get a little bit more frightened, but once again, it has to be wrapped in with everything else. What sort of narrative are we building? I'll keep on developing that. I'll keep on sharing it over the Discord. Mind you, that link's in the description as well. Code word doctor when you sign up for the Discord. It'll get you 50% off your first month. And then at 4.4, if we skip right over 4.3, go to 4.4, the market, especially if it goes along with more narrative of the Fed being behind, things are worse than we thought. Oh my goodness, the sky is falling. That's where you could start to see that mega downward pressure on the markets. And when I say mega, I just mean that we could actually push us down to some pretty interesting levels. And you want to think more coiled spring than anything. And I'm really looking for those opportunities. And we'll see what sort of narrative is shaping up for the market. So that's what's coming up for us. Watch for 4.2 or below. For unemployment, that'd be absolutely great. Now, as per the FedWatch CME tool that we have here, if we take a look at September for what's coming for us, nearly a certainty that we get a 25 basis point rate cut. When we go out to October, what we see is that there's hardly any chance whatsoever that we stay where we're at. And a coin toss over, we have 25 or 50 basis points of cuts by then. And then we go out to December of 2025. What does that look like? December's a long way away, but what I will say is that it's nearly looking like we got about 80% going towards seeing 2 to 3 of those 25 basis point rate cuts, or that 50 to 75 basis point. And if we go all the way out to December of 2026, right now, the peak is between the federal funds rate going from 275 to 300 up to 300 to 325. So I'm watching the long end of the curve, and I'm watching that near end to watch and see what happens and how it develops over time, especially that December 2025 number is really what I'm interested in for trying to anticipate a little bit more of how the market sees things currently going. All right, guys. So with that said, let's jump into the technicals on this. I want to go to the SPY, and we're looking at the daily chart right now. And there is some opportunity that comes with testing this green 5, some more that comes along with testing the 13. But if we really want to talk about opportunity, the monthly chart is the place to look, because what I want to talk about is the softness that we see when it does happen, especially when we look back to how terrible things were just recently when we had that Liberation Day tariff announcement, if you will. We did not pull back to the 50 EMA, but we got darn close to it. Now, what did it take to get there? It took the sell-off that we had through 2022's bear market to take us all the way down there. And when we finally touched it, look at the run that took place afterwards. So should we happen to get things bad enough where we get down there, man, that's where the opportunity comes in. We almost doubled. We're up almost 94% from those October 2022 lows, 2022, 20 to to lows that we had back in October. And if we go back further from that, the pandemic actually took us back to that 50-month EMA. And I keep on talking about opportunity. That doesn't mean that I think that we're going to get here. But what I will say is that as soon as we got that green candle, after touching that, we doubled again. That's 101, almost 102% from running from down there up until the peak before we had that 2022 sell-off. If we look back before that, we had the last time the Fed tried to raise rates, couldn't touch it though, got darn close. We actually have to go all the way back to October of 2011 was the last time that we really hit there. Once again, just a massive opportunity. So the reason I bring this up, that's 114%, by the way. These runs that seem to hit after we touch that 50 EMA seem to be just incredible opportunities. Now, that's not it for opportunity, because the 13 EMA that we have on here for the monthly also brings along with it significant opportunity. So when we go just to the Liberation Day tariffs that we got, when we got back up above that thing, it ran 17%. And that's just going from what we had. Let me see. So that was that day back there, happens to be April. So this is May, June, July, and now August. And then we'll get September's candle coming up next. 17% run, not so bad. Let's just go back to the last time that we almost got down to that 13 EMA. There we go. So last time we got afraid and we got almost down there. We made a 21% run. Let's go to the time before that we got down to that 13 green candle. Take it to the top. We made, actually, we'll just go to this one right here because that's when we almost touched again. 36% for that one. So the point that I'm making here, as we look at this, even the 5, by the way, that green 5 still has significant support to it when we see it. So the more that we pull back on this spring, the more that we get to shoot up and the more opportunity that we find from there. So what we're watching for is we're watching to see what exactly happens with those reports. We're watching with bated breath. And if we see some red come in, then we should start looking for, okay, where are my opportunity spots? The 5-month EMA is definitely one of those first ones that we need to be looking for if we do happen to sell down. The 13 is that next major opportunity, especially in the near term, that comes our way. If the narrative really builds out, and now mind you, it took Liberation Day tariffs, which said that it was going to crash the entire world economy, and it took the pandemic to reach that 50-month EMA again, where the economy really did come to a lurching stop and then start again, and all those things. Every time we hit it, we really triggered off of that one. So what does it take to get back down to that 50 EMA this time? Well, what would take news of recession? It would take supporting evidence for a recession, and most likely it would also come with, at some point in time, some emergency rate cuts. And I wouldn't be surprised that if we did get down that far, that those emergency rate cuts were really well timed with tagging the 50-month EMA. Call me a conspiracy theorist if you will, but honestly, I could see that exactly happening just in that way. That just think about the last time, even with these Trump Liberation Day tariffs, when did we have Trump come in and make that pivot on the tariffs? Let's drop back down to the daily chart here and go back to when that happened. It was when we were all the way down here near that bottom. And let me see, we're sitting at about 492. And he was like, you know what? We're going to suspend him for now. We're going to get work on things. And boom, the market took off. And that's exactly what we got from there. So it was very, very explosive, very volatile to have that announcement made. So should we find ourselves in those times when we're like, oh, my money's gone, my portfolio's down so much, I can't believe, look at the monthly chart on the SPY, see if we're down near that 50-month. Yeah, it's going to come with a lot of pain, but man, there's a lot of celebration to follow it as well. So this isn't a doom and gloom kind of video. I'm not a doom and gloom kind of guy. I'm an opportunity kind of guy. I used to call myself the king of opportunities as a joke with some of my students, because I always gave them as many opportunities as possible to really turn things around for themselves or to really reach for the top for themselves. And some students chose to take me up on that and others didn't, but the opportunities were still there, just like for the market, whether you choose to take advantage of the opportunities as they come along. So I'm going to be looking a little bit at the 5. And once again, it goes with that narrative that they put out there. Are they just going to give us a little bit of, oh, those numbers weren't great, and we use a little bit of worry, a little bit of FUD, a little bit of just to get down to that 5-month EMA? Or is it going to be something that's a little bit more concerning, that it's going to make us like really sweat those numbers, at least at first, like, oh, that's not recessionary, but that's not good. That sounds like 13-month EMA to me. And then pushing down below that is going to take some significant evidence to say, we're in a bad place, it's worse off than we thought. And like having people buy into that and getting people to let go and paper hand and all that kind of stuff and getting people stop losses to trigger and sell. And then we can also look at things like the put call ratio, by the way. If you're an options person, you can look at that to watch for when that starts to peak, where you start to see just a massive amount of puts come out. And usually that's the time that it's time to turn things around in a contrarian manner, if you will. And it's a very scary time to do that, and it's not an easy time to do that. But that's exactly why we have a community, the Discord community, where we can go and can support each other in our journey towards financial freedom. We're there to support you in your journey, and also to support your journey in building that alpha in your portfolio as well. Like I said, links in the description for that. Anytime that you guys want to come over, I'm one of the panel experts over there. We have an entire team that's dedicated to working with that community, talking with them over time, sharing down our ideas, our trades, our buys, our sells, you name it. It's all over there and waiting for you. And guys, that workshop coming up for us. Yeah, it's for the complete beginner. That next level's on its way, though, where we're going to start talking about, okay, well, you got the whole buy to open, sell to close. Now let's talk about opportunities with selling to open, because, man, especially if you already have an existing portfolio, this is something that can really take some more money, like just what's out there on the table, and you've just been leaving it on the table, and this will take it off the table and put it into your portfolio instead. And yeah, there's some risks that come with it. Yeah, we got to be aware of them, but man, there can be some and just incredible deals in order to be found, or not even really getting rid of anything, and like nearly as close to risk-free trading as you can do with those options as well when you put in the short side of options. And I got to be careful when I say short to a general audience, because people think market go down when you say short, but short options means that you sell them to open. Long options mean that you bought them to open. It's not necessarily an up or down thing. It's a little bit more nuanced than that. That's exactly why we have the workshop. Like I said, links in the description for that. Make sure you use code word money when you sign up for that workshop. Like I said, I have a presentation I'll put out there for you. I'll take your questions throughout that presentation, and at the end of that presentation, if you think of something later, or if you missed part of the presentation because sometimes the calendar doesn't work out too well for you, maybe you had some technical difficulties, all of that stuff gets recorded and it gets uploaded to that community that you can go back and you can rewatch parts of it. I'll even send out the presentation itself, where you can go through and you can actually scroll through the presentation. So the idea here is very much the spirit of education, which I've been a part of for the past 17 years. This is currently my 18th year in education, as I'm a math teacher with a passion for finance. And I like to keep on sharing that out with everyone, trying to reach the broadest audience possible. It's why I got my doctorate in the first place. And I got to tell you, I'm very happy with what I do. And I'm also very happy to reach out to such wonderful people. And that, like I said, that next workshop is coming up on September the 6th. And then the next one after that is the more advanced one. That date is still to be announced, but it's going to be coming very, very soon. I'm very excited to actually move on to that next level with people with options, where they can ask even more detailed questions where they might already know about calls and puts and all that kind of stuff. So guys, I've taken up a lot of your time. Let me know what you think down in the comments. Just go ahead and flip that coin. The comments are free anyway, right? So are we going to see massive sell-off? Are we going to see massive bull run instead? Like, is this week just there to scare us, and then September gets flipped on its head and we actually have a very outperformant month? Or is it going to be the typical September sell-off that we see, and we see some red happening anyway? We see some more de-risking taking place. Let me know down in the comments. I'd absolutely love to know your thoughts on it. You can also tell me what you thought about this video. Otherwise, guys, I'll see you in the workshop over at the Discord or back here at YouTube. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you next video.